Hello, it is Monday, the 20th of August, 2012. This is video number 2 for today. The first one regarding silver's micro volatility. And, well, there's been some breakouts today, which is why the second video is in play. We'll get to silver right after this daily chart of gold. There's really not much to go over. I've talked a lot about 1623, really months now as first support, now resistance. I'd be very surprised if over the next, I guess until tomorrow morning, over the next 16 or so hours, if we don't have a clear breakout above, roughly in the area of 1635 to 1640 over the next little while. That doesn't mean it won't, but I'd be very surprised if it doesn't occur, as the breakout patterns are heavily in play, consistently finding the pattern of higher lows with, of course, a multiple resistance test. Now let's move on to silver. Of course, silver today having a breakout at levels not seen in 2 months, as it's had the clear breakout above this significant resistance level in or around 2842. And as far as the 18 average, I've talked a lot about this. You had the failure in here. Okay, well, that's fine, but it's not good. You just, after you have a breakout, come back to this, go higher, and then break out the previous high. Well, it didn't go higher, it went lower. Okay, we got above it here. Okay, come back again a little deeper. Okay, breakout, sweet. Just got to get above this high. Oh, no, it didn't get above it here. Okay, back to the support level. And, well, for the last couple of weeks, it's been in that upward trend when we look at the 18 average of highs, lows, closes, which is really a band more than anything. And it's in the uptrend, and of course, this is that breakout period. So really, if anything, today is that breakout day. Oh, it still could be a bull trap, but it's looking as if today might be the start of that intermediate term bull market. Now, let's take a look at this from point A to point B. In order to do this, I need to look at this on the 13-hour chart. Each one of these candles representing 13 hours worth of data, except this newest one, which has 16 minutes worth of data. And within this, we take a look at the Fibonacci retracement. That's when you take the high, you divide it by the low, which is almost 30, divided by a little over 26, to the power of 61.8% times the low, to the power of 38.2% times the low. That gives us the figures. Oftentimes, these levels can work so well, hitting resistance and support, like amazing, like we've seen in here. Resistance was found perfect on this red candle. Support found perfect. Just a little bit of a bounce, but still finding support. And then boom, 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 boom. Lots of resistance at the level. But it didn't, A, test this low or break this low. Or B, break this low, I guess. Instead, it found a higher support level and gets above it. You would have liked on this pullback to find support where it was resistance. Instead, it found a deeper pullback. But it looks like a miniature bear trap. And then finding support at this level, and today, of course, just breaking above the level. As I said, I'd be surprised if gold didn't go a little bit higher. I'd say the same thing about silver. I'd be surprised if we don't test the high 29s, low 29s over the next 16, 18 hours. Yes, it's possible this could still be a bull trap breakout, but it's impossible to know just simply by looking at this chart. And if anything, simply looking at this now, you would see that for good odds for the potential moves up to at least this 30 area. And support, it'd be nice to see support, if any, to be found at this 2840 level, even small pierces below 28 and a quarter. That's all fine and dandy as well. But a lot of times when you have a breakout, you can have a significant breakout, maybe like 78, 80, and then maybe come pull back towards the downside. If it just keeps going higher and you start to see the price action start to go like 29.35, 29.40, then you may want to throw out the fact of having that deep of a pullback or even anything other than miniature pullbacks, and thus a move up to the 30 level, as it's not all that uncommon when you break the 61.8% move to have decent green candle moves that make it up to what the previous high happens to be. Again, if you have a move up to the high, you come back down like this, and, well, you come back up to 30, well, now the odds that you break out the 30 level is pretty decent. Of course, the 30 has major value as well. When we go back to the daily time frame and we take the highs at the end of February of 37.5 and the 26 lows, that would be the 38.2% retracement from those levels. Thank you for tuning in to what should be the final video for today, and have yourself a great day. Bye-bye.